Are you having trouble getting financial information from your trustee? Are you told the information is coming, but it never arrives? Well, let's talk about what to do. By the end of this video, you'll understand when your trustee must account and what the trustee must include in the trust account. California law says a trustee must account at least annually upon termination of the trust or where there's a change in trustee. The trustee must account to each beneficiary who is currently authorized to receive income or principal distributions from the trust in the trustee's discretion. Each of these events requires the trustee to provide an account. And it's important you understand that if it's even possible for you to currently get principal or income as a trust beneficiary, then you are entitled to an account. It is the trust account that allows a trust beneficiary to understand what has been done with trust income and assets during the period of the trust account. It's by reviewing an account that the trust beneficiary can decide that the trustee has acted appropriately or inappropriately with trust assets while they've been serving as trustee. The trustee's duty to account is mandatory. If you want to know how to force your trustee to account, then the card up above has a link to our video on how to compel the trustee to account. The trust account is a combination of a balance sheet and income and expense statement. The trustee has to report all the assets in the trust and their values on the day he or she became the trustee. The trustee has to report all other property and all income that's come into the trust and has to show you the day this property was received, its values, and the source. The same thing applies to any money that's gone out during the course of the account. The trustee has to show when the money went out, to whom, for what purpose, and in what amount. At the end of the account period, the trustee has to report to you the assets that remain and their values. In addition to this, if the trust has any kind of liabilities, then the trustee has to separately report the amount that's owed, to whom, and why that money is owed. The trustee's failure to provide a trust account is probably the single most common breach of fiduciary duty, and it's probably the most important one for a trust beneficiary to address because it's getting the account that will give you the information you need to determine if there have been other breaches of the trustee's fiduciary duties during the course of trust administration. Thanks for taking the time to watch our playlist on trustees' duties. Most people don't realize just how many fiduciary duties a trustee has to the trust beneficiaries. And most trust beneficiaries don't realize just how many different ways a trustee may have breached their fiduciary duties. If you believe that there's something going wrong in your case, more likely than not, there has been a breach of fiduciary duty. If you'd like to discuss your case, please feel free to give us a call. And if you'd like more information, then please visit our website and order my book, Winning the Inheritance Battle. If you found this video helpful, then please hit the subscribe bell, leave us a comment. We'll be glad to respond if you do, and give us a thumbs up.